Good day, traders. Hope you guys are good and welcome to my learning space. So without wasting any time, let's get right into today's video. The topic of today is mitigation and breakers. And this is just one of those smart money concepts that will help you in approaching the market. So it will be to your own benefit if you already watched my previous videos, because it will not be difficult for you to understand what's going on. So if you haven't watched my other videos on smart money concepts, make sure that you watch them so that you catch up with this video. And I hope you enjoy this. So mitigation, right, is a scenario or it's a pattern where, say, for example, you win an uptrend, right? And you've created a swing high, right? And then obviously after every impulsive move, you have a correction. And then you have this other push to the upside, but this push fails to break above this swing high. This is in the context of an uptrend, right? And after it fails to break above, it results in a break of structure, right? So the conversation or the chat behind it is that once the market has created this break of structure, it will go back to retest this area over here and then go down. And then obviously, and then the same thing applies when you're in a downtrend where you create a swing low, right? And then a swing high, a failure to break below this area, and then you have a strong push that breaks structure. So now the chart becomes, when the market comes back, it will retest this level where it was a previous swing high, and then that's where you're going to be able to buy, right? So the distinct features of mitigation, let me write them down for you guys. You have a failure, you have a failure swing. This means that the market failed to break above. In the context of an uptrend, it failed to break above the swing high. In a downtrend, it failed to break below the swing low, right? And then you have a break of structure, right? So this area over here, where it was your swing low, the market will come back and retest it. And obviously, I will show these, or I'll show this on a live market. Now, a breaker. Let me quickly remove everything. Let's say you're in an uptrend, right? This is your swing high. It creates a swing low, breaks above, only for that to be a liquidity sweep, and then it will come back. So you have a swing high over here, which obviously represents buy stop liquidity. If you already watched my videos, you're already familiar with what that is. After taking out liquidity, then you get a strong push to the downside, which breaks through previous structure. Can't see my cursor. Okay. So this is in the context of an uptrend turning into a downtrend, right? And then in the context of a downtrend, liquidity sweep, and then going to take an entry here. So I saw this other chat online where people are saying, isn't this simply support and resistance? And to an extent, it is. But remember, for you to better approach market situations or real life market situations, it's very important that you understand the context behind price, right? So as smart money concept or smart money traders, we are interested in the whys behind price movements, because as soon as we understand the why behind a price movement, it's going to be easier for us to understand what we're going to need to do. And obviously, this is not complete. If you understand how to identify order blocks, aka support, supply and demand levels, if you understand a buy stop liquidity, a sell stop liquidity, liquidity grab, and stuff like that. Again, what is a feature of a breaker? A breaker is a liquidity or stop run, right? Simply meaning that stop losses were hunted before a reversal was made, and also a break of structure. Now, for entries or to know how you should trade them, obviously you need to understand the concept of efficiency and inefficiency, because together with all of this, you'll know exactly where to place your limit orders. So like I said, I already explained those concepts in different or in other videos. So it will be to your own benefit to check them out. But if you're already caught up with the content, you'll understand what I'm talking about. Now let's go to live markets to actually demonstrate what these would look like. So yeah, this would be an example of a breaker in the context of a downtrend. So the market was coming down, and as it was coming down, you had this low over here. Now we know that swing highs and swing lows are potential areas of liquidity. So what happened in this scenario is that the market came here, took liquidity, and then pushed to the upside, breaking previous structure. And then when the market came back, you were able to get a clean entry. It's very important, guys, that you understand that this does not necessarily work alone. It works with various or with an addition of other confirmations, right? So, like I said, understanding how to identify areas of liquidity, supply and demand levels, and also multi-time frame analysis. Once you understand those concepts and once you have those concepts in your bag, then it becomes easier to trade these concepts with high probability. So yeah, let's move on to another example. Now, this is mitigation in the context of an uptrend. As you can see here, we had our swing high, swing low. We failed to break above this area, right? We broke this previous area, and look what happened once we came back into that level. The market went down, right? And then our last example, as you can see over here, we were going up. This is a breaker. You're taking liquidity away from this swing high over here with this movement over here, broken structure. And as soon as the market went back, we retested it and then able to take some profit, right? So this scenario, without getting too ahead of myself, is actually a QML scenario, Quasimodo, because the market broken through this and we got an entry via this point over here, but the market went up again to an area where your swing high was, and therefore you got an entry. So it looks like this. If it's a breaker scenario, right? This is your liquidity sweep, right, as per usual. So what the market does is it goes back to that area, like we said, right? But sometimes it does not break this low that it created, right? So it will go back to an area again where your swing high, where liquidity was taken, it will go back to that area or to that level, and then that's where you get a major drop, right? But we'll talk more on that in the next video. For the sake of me keeping this video short, this is all I wanted to share with you guys today. I hope you guys understood it. I hope it made sense. If you have questions, feel free to comment. Feel free to engage with me. I do answer every comment on time. And thank you guys for watching. If you've gotten to this point and you still haven't subscribed, please make sure that you hit the subscribe button. And I'll see you in another video. For now,